Hello everyone, and thank you for tuning into the North Main Minute. I'm Joshua Doby. Ready or not, we're getting to the year end. I know, it just seems like we just got done with July 4th celebrations and we're blowing right into Thanksgiving, going to be at Christmas and New Year's in what feels like about 10 minutes. So we need to think about year end kinds of things, or those things financially which are sensitive to the calendar. Big one, charitable contributions. If you're not aware, charitable contributions, in order for them to be applicable to this tax year, need to be completed by December 31st. So different than some other things we're able to do it the first quarter or even up to tax filing deadlines, with charitable contributions, you need to have them completed by December 31st. So very, very important to keep in mind, especially if you are one who, say, wants to give an appreciated asset to a 501c3 charity. That takes a little bit more time than just writing a check. Checks tend to be pretty quick, meaning you have cash in your bank account, you're just wanting to give after-tax dollars through a check to a charitable organization. You can do that relatively quickly. The money moves pretty quickly. But if you're giving appreciated assets, like real estate especially, but also stocks, funds, bonds, other kinds of appreciated assets that you'd like to give for tax reasons to a charity, make sure the charity is built and has the chassis and means to accept that. Not every charity does. But then two, also very, very important, make sure that you understand what the tax implications actually are for you. For example, if you're giving appreciated shares of stock, you want to be mindful of what the value is on the day of transfer. That actually is the amount that may be able to be deducted relative to your charitable contribution. It's not what you paid for it, it's not what the average has been, but it's on the day of transfer to the charitable entity. Just a little nugget there to keep in mind, especially as you're putting your tax records together for the year end. Also, this is the third item, you want to make sure that you understand what actually the charitable impact is going to be on you. A couple of years ago, we had a doubling of the standard deduction for individuals on their tax returns. What that meant was that for a lot of folks who gave charitably, they didn't itemize their deductions anymore because the standard deduction is now higher than what the actual charitable deductions they're making is. So you want to make sure that there's actual impact if you're doing it for tax reasons. You may be doing it for pure charitable reasons, and that's fine, but you want to be aware of what actually the tax impact is ahead of time so that you don't get into a space of expectation that's unmet. If you'd like to reach out to us at North Main Financial Group, talk about whether a charitable strategy makes sense for you. Do you have appreciated assets that you'd like to give to a tax-exempt organization, and would it be beneficial to you tax-wise? We'd love to chat with you. NorthMainFinancial.com.